Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news commodity prices are facing some headwinds. And that may get worse as trade prospects dim and the de-risking from China builds. Today's full dairy auction brought lower prices from both last week's Pulse event and the prior week's Full event. But the dips were largely as expected and foreshadowed in the derivatives market. In the event, overall prices were 2.8% lower than the last Full event, but with the New Zealand dollar weaker in New Zealand dollars, the decline was just 0.7%. Today's retreat doesn't interrupt the 2024 rising trend, so it seems unlikely any farm gate payout forecasts will be adjusted because of this. Demand from China was lighter today, but they may just be because they have already built their requirements for their upcoming Chinese New Year holiday season. US retail sales, as monitored by their Red Book survey, were a healthy 4.8% higher last week than the same week a year ago. And November retail sales in the US, as reported by their official data, were up 3.8% from the same month a year ago, the best gain of 2024. And that was driven by strong car sales. Business inventories remain at very manageable levels, so not building any stress there. Meanwhile, US industrial production actually slipped in November, down 0.9% from a year ago, although there were signs of stabilising in the November month. Factory production actually rose, but was undermined by both mining and utility production. And Canada's November CPI inflation rate came in at 1.9%, pretty much as expected. Their central bank will be happy with that because it allows them to continue to unwind their policy rate, which is at 3.25% and next reviewed at the end of January. Across the Pacific, we should note that both Nissan and Honda have begun merger talks. In China, new official data shows that capital flight by foreign investors reached a record level in November as the de-risking trend rose to a new urgency. And international airlines are also pulling back on their China routes. One of the things to come out of the recent Central Economic Work Conference is that Chinese leaders reportedly agreed to raise their budget deficit to 4% of GDP in 2025, its highest on record. For reference, the New Zealand equivalent is 2.4% of our GDP, but in the US it is 6.3% of theirs. The Chinese are holding on to an economic growth target of around 5%. And Singapore's exports rose more than expected in November, up 3.4%, and a better than expected comeback after their weak October result. Imports also rose, up by 2.8% on the same basis. And we should probably note that there was a general easing of commodity prices overnight, not just dairy products. The US Treasury 10-year yield is now just on 4.39% and down 1 basis point from yesterday. And the price of gold will start today at $2,641 an ounce, down $10 from yesterday. And oil prices are down $1 to be just on $69.50 a barrel in the US, while the international Brent price is down to almost $1 to be $72.50 a barrel. And the Kiwi dollar starts today at just on 57.6 US cents and down 20 basis points from yesterday. Against the Aussie, we're up 20 basis points at 90.9 Australian cents. Against the euro, also down 20 basis points at 54.8 euro cents. That all means our trade-weighted index starts today at just on 67.6 to be down 20 basis points from this time yesterday. And the Bitcoin price starts today at $106,952 and up less than 0.1% from this time yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.